Remember the pandemic investing frenzy when everyone suddenly seemed to have a demat account? Well, that retail wave which once defined India's market boom now seems to be losing steam. After 3 years of record account openings and IPO euphoria, the brakes are on. In the first 9 months of 2025, new demat accounts have plunged nearly 40% compared to last year, one of the sharpest declines in recent memory. 36.2 million new accounts were opened in 2024. This year, just 21.8 million. That's a drop of almost 14 million accounts. Monthly additions have also halved, falling from 4 million last year to just 2.4 million in 2025. So what's changed? Let's break it down in markets this week. Between 2021 and 2024, India witnessed a retail investing revolution. Demat accounts tripled in just 3 years, powered by easy digital onboarding, a post-COVID savings boom, and a flood of high-profile IPOs. By mid-2025, India had crossed 20 crore demat accounts, up from barely 5 crore in 2020. Young investors from Tier 2 and Tier 3 cities joined the equity wave, hoping to ride the next big opportunity. But the momentum that once felt unstoppable is now clearly cooling. So what's behind the slowdown? A mix of market fatigue, volatility, and new headwinds. First, volatility. Indian equities have lagged global peers this year. In US dollar terms, the Sensex gained just 1.8% and the Nifty 2.5%, while markets like the Nasdaq and DAX soared between 19 and 35%. Then there is IPO fatigue. Many of this year's new listings have given weak or even negative returns, draining enthusiasm among new retail investors. And finally, there are regulatory and macro pressures. Tighter SEBI norms, higher transaction taxes, global trade tensions, and sustained FPI outflows. As one brokerage official put it, new investors are cautious when the markets look directionless. The impact is already showing up in brokerage earnings. For brokers, fewer new demat accounts mean slower growth and rising pressure on revenues. Zerodha, India's largest discount broker, saw a 40% drop in Q1 revenue year-on-year. Angel One's profit declined by over 60%, and 5paisa's revenues fell 24% year-on-year. Rising costs, new SEBI rules, and fewer active traders have all squeezed margins, forcing firms to rethink their growth strategies. So is this a temporary phase? Well, experts say this looks like a pause, not a collapse. With IPO activity expected to pick up in the last quarter of 2025, retail participation could rebound. But for that to happen, investor confidence, especially among young, first-time investors, will need rebuilding. For now, think of this as a breather, not a burnout. The retail rush that began in 2020 may be catching its breath before the next wave begins. So if the pandemic years were about new investors rushing in, 2025 might be about learning patience. Because in markets, every lull has a lesson, and every pause sets up the next big move. That's it for this episode of Markets This Week. For sharper insights on market trends and what they mean for you, stay tuned and subscribe to Business Standard.